Hey, everybody. I am Scott Wayman. I'm the founder and CEO, for those of you that don't know, at Kangaroo Time. And I'll get into what Kangaroo Time is in just a moment. Thanks for so much for joining our webinar today with Audra Wilson Russell. We are, are so excited to have her. Many of you need answers right now. I think all of us are gearing up for what should be the year of recovery. Just a great year to kind of claw back the tumultuous 2020 that we just exited. And I'm super excited to hear some guidance from Audra and what she has to say about PPP, second draw, and Consolidated Appropriations Act. Anyway, thank you for joining us. We collaborated with Audra many times in the past, and you can see some of those collaborations on our YouTube channel. So if you go to YouTube, search for Kangaroo Time. We have, I think, nearly 60 educational videos that we started doing at the beginning of COVID. So we've been busy, over the last 9 months putting these on, and we've been so fortunate to have content partners like Audra to do the hard work and present, and we've been super fortunate to meet thousands of you, which has been amazing. Audra, this is actually your program, and we thank you for having us. And we wanted to kick it off with a 5-minute overview of what we're doing with our product, with agency billing and subsidies. Which is critical right now. We felt like we've always done the revenue cycle management and payments better than anybody on the planet. That's our jam. That's what we do. We also have classroom automation, so tools for your teachers, and parent engagement, which we do really well. If you look in the App Store, we have just excellent ratings. Our UI UX team, so our designers, they work really hard to make the software usable for everybody. But in the area of revenue cycle and the back end of the childcare operations, we feel like we do it best. Our new subsidy billing platform is something that we just launched, and we're super excited about it. This tool was made specifically for childcare providers who accept subsidies. And now providers are able to automate the invoices to families who use subsidy, collect those co-pays, calculate those differentials, understand absent days, and manage all the attendance, monitor expiring contracts. And it's beautiful. So with that said, I'm going to have Dave just give a quick overview. Dave, you've got like 4 minutes. I think Audra's going to have to unshare screen. You take over, and then we will get started with content.
Oh, well, thanks for the intro. I'm David Gonzalez. I'm a product manager at Kangaroo Time, and happy to share with you what we've been working on from a subsidy management perspective. So what you'll see right away in this new module that we developed is a dashboard that surfaces the key information that you need to know without you having to go search through the system to find it. So what you'll see are the plans or the contracts that are active, expiring, or inactive. We know that's a pain point, trying to keep track of who needs to be renewed and when. So this gives you a at a glance view as soon as you log in to understand that, hey, look, I have 10 contracts or plans that are expiring soon, and that I should probably kick off the process of getting those families renewed. After I see this, I can drill down into the plans area, filter by who's expiring soon, and there I have my list. And then I can go ahead and start the process of working with each of these families to make sure that they don't have any gaps in care. So again, that just reduces time and effort in getting the information you need to know to manage your subsidies or your subsidy families. Second is allowable absent days. So actually just looking at the attendance the attendance portion of subsidies is really, really important. We understand that. We know that depending on your state or county, you're going to be provisioned a certain amount of, or each child is provisioned a certain amount of absent days that they can use towards their reimbursable hours or reimbursable days. We capture that tally. We use our parent app information on check-in and check-outs to be able to keep track of absent days. As you see, we keep a running log. You can see how many absent days are used, remaining, and then during whatever period of time that you monitor your reimbursements over, you get to see how many reimbursable hours or reimbursable days have been accrued. Again, we're doing a lot of math for you. That way you have visibility into are my families meeting the requirements to reach full reimbursement. So again, you can kind of go deep too. So if you see anything with a specific child, you can look at their attendance record. You can see which absent days were allowable, unexcused, and which days that they attended. Finally, is we're calculating that difference for you. So, in situations where the state is going to reimburse you less because of the absenteeism of a child, we allow you to automate the calculation and collection of that difference. And that's kind of like, so kind of, again, doing all that math and making it easy for you to make sure you understand, who's meeting their attendance hours, keeping everyone at the threshold they need to. If they're not, going ahead and collecting that lost revenue that you lost from the absenteeism. The last bit I'll show to you is the accounts area. That's really simple. You get to see the status of the accounts, who's paid, who's overdue, and who's approved. You can always manage those who are overdue. And again, you don't have to go far to find that information. So again, kind of, I think the three takeaways is we're making it easier for you to, one, get the information that you need to know as it relates to subsidies. Two, helping kind of automate and streamline processes so you can spend less time digging through all of your contracts and actually identifying who's expiring soon. And then three, in real time, understanding who's meeting their hours and who's not. And making sure that everyone's kind of up to date. And four would be also in the instance where you do see a reduction in reimbursement, giving you the ability to automate charges to collect a portion of that if you'd like to. So more to come on this, but thanks for letting me share this with you today, guys. And feel free to reach out to me or Scott or Jen if you have any questions.
Awesome, David. Yeah, this is something we feel like is very revolutionary for owners and directors out there. Gives you everything you need to know, you need to manage subsidy payments and the entire process. We're actually hosting a virtual product launch on January 19th at noon Eastern time. So please join us in an overview of the new tool. We'll go into much more depth then. Genevieve's going to share the link in chat so you can sign up for that. But that being said, let's get to the important stuff that you all came here for. I wanted to introduce Audra. She is a certified CPA and the owner of WATS CPA, virtual accounting firm based in Florida. She focused on helping childcare businesses and childcare business owners run their early education schools and businesses. We previously met at a conference and she's done some amazing content for us. I recommend that everybody heads over to our blog and check that out, kangarootime.com/blog. She has multiple entries of content there. Real quick, if you're here, you will get a certificate. We will email it to you. Please don't email us. We get those emails all the time. Genevieve will get it out to you. So as long as you're signed up formally, we have your email address, and you've attended, we will verify that if your licensing consortium wants validation. Your mics and cameras are not on. And we will be recording this, and tomorrow when Genevieve sends out your certificate, you'll also get the link for recording. And also just know on our YouTube channel, it's all here. Audra, we're so excited for you to be here. We're so excited to dig in on this content. We'll be discussing today, or you will, the important financial considerations for your center, including the Consolidated Appropriations Act, PPP Round 2, employee retention credits, which is a different curveball, and you can apply for both, from what our accountant is telling us, and then PPP loan forgiveness and more. Audra, so glad to have you here. I'll let you take it away. Thank you.
Awesome. Thank you so much for that introduction, Scott. And thank you for allowing me the opportunity to partner with you and connect with those childcare providers that I may not have had an opportunity to connect with without you sending out that generous email blast. So I really do thank you for that. So I won't keep you guys waiting too long. I will ask that you do hold your questions until the end of the presentation, because we may touch on what your question is throughout the presentation. So I'm getting ready to share my screen here, and then we'll get right to it. Okay, before we start, I have to read this disclaimer. The information in these materials, as well as any additional information provided by the presenters, should not be considered legal or accounting advice. Attendees should consult with their legal counsel before taking any actions that could affect their legal rights, and should not consider these materials or discussions about these materials to be legal or other advice regarding any specific matter. The webinar is being recorded and may be available after the conclusion of the event. By participating, you consent to the recording and future use of all audio and visual content. Okay, so the agenda today, I'll tell you just a little bit more about myself. We'll review both the PPP loans and the EIDL loans, the EIDL, the forgiveness process for the PPP loans, talk about some payroll tax credits, and then the $10 billion set aside for the Child Care and Development Block Grant. And then also I'll provide you some link to the resources that are within the presentation. So as well as the link to the video for today's recording, you'll also receive a printout of the handouts of today's presentation. Okay, so I'm Audra Wilson Russell. I own WATS CPA firm, and I am located in the state of Florida. I'm a certified public accountant. I attended Florida State University to receive my bachelor's in accounting, and then on to Lynn University for my master's in business administration. I am a certified pro advisor for QuickBooks Online and Xero, and more recently, a Kangaroo Time partner. So I am going to launch my first polling question here. Take a few seconds to answer that. I just want to see who we have in the room with us today. Okay, we have about 60% in. Okay, I'm going to end the poll and share the results. So as you can see, about 75% of you today on the call are child care centers. Okay, and I think I had a second polling question on there that I want to launch before we get started. And that is, how many employees do you currently have? Okay, maybe about 5 more seconds here. Okay, so the majority of you here on the call today have 20 or more employees. So PPP is definitely a big topic. All right, so jumping into the EIDL loan, the economic injury disaster loan. So who's eligible for this? Anyone who suffered a substantial economic injury as a result of a disaster, have 500 or fewer employees, are nonprofit, sole prop, independent contractors, and this is an actual loan. So this isn't one that you can apply for forgiveness for. This is a loan through the SBA up to $2 million, paid back over 30 years at 3.75% or 2.75 if you are a nonprofit. And this is just pretty much a review of the webinar and information that I have on my YouTube channel that you can, kind of refer back to. There's an advance that's associated with the EIDL loan, and that advance is where the companies were able to request up to $10,000 in advance prior to getting approval for the loan. And when they gave them out, it was at $1,000 per employee. But I just recently heard that instead of it being $1,000 per employee, the SBA actually was supposed to pay the full $10,000. So you may or may not receive the rest of your money if that gets pushed through. And this is for businesses with fewer than 300 employees located in low income areas. This is the second round of the EIDL advance. And people who are eligible, if they can show an economic loss of at least 30%, not in an agricultural business. So the advance can be used to pay sick leave, payroll, meet other increased costs due to COVID, mortgage payments, and those types of things. In the beginning, the EIDL advance was supposed to reduce the amount of your PPP loan forgiveness, but with the new act, they've done away with that. So it will not reduce your PPP loan on your forgiveness application. And it is not considered income. It's a grant, pretty much free money that you do not have to pay taxes on. So be careful on your 2020 and your 2021 tax returns to ensure that you don't pick up that income as taxable. So now heading over to the PPP loans, the first and the second draw. So up to $284 billion towards the retention and certain other expenses. This is the second draw, the $284 billion, and the applications have opened as of Monday, the 11th, and they will close on March 31st or when the funds run out. And prior to this 284, there's already been a bill or bills for 525 billion. All right, so it's reopening, like I said, on January 11th, and they're starting with the community financial institutions on the second draw or on this next round of PPP. So there was some disparities in the lower income communities where they didn't really have as much access to this capital. So they're tapping into those communities first. And it's under the Economic Aid Act. So building on the success of the first round of the SBA is continuing to address potential barriers to access to capital for minority, underserved, veteran, and women-owned businesses. Okay, so They're partnering with institutions who are in the low and moderate income communities and also the smaller community lenders. All right, and those are the types of lenders that they are partnering with first to get the first round of PPP out. All right. All right, so next polling question here. Really quickly, did you receive a PPP loan in round one? Okay, I'm going to end the poll. And it looks like the majority of everyone on the call received a PPP loan. Okay, so just a recap. This is the first draw. And to be clear, right now, that $284 billion is for both the first draw and the second draw. So if you missed your opportunity to apply for a PPP loan, you can apply for the first draw. If you already received a PPP loan and you've spent all those funds, you can apply for what's called the second draw. And they do have their different rules and eligibility. So this one is the first draw, brand new, never received a PPP loan. This is for businesses up to 500 employees. And the loan is up to 10 million. And the way that it's calculated is multiplying your monthly payroll costs or your average monthly payroll costs and multiplying that by 2.5 times. And if it turns out that your monthly payroll cost was higher than what you calculated when you did your initial loan, you can actually apply for a remodification and increase your loan amount on that first draw. So with this one, it covers the payroll costs, mortgage interest, rent, utilities, plus some expansions of expenses that we're going to talk about today. And with this one, you cannot use the PPP loan for the same purposes of the EIDL loan. So yes, you can have both the EIDL loan and the PPP loan, but they can't be used for the same expenses. Now, in the second draw, some of the changes I have here highlighted in green, where eligible businesses up to 300 employees. And with this one, you had to have used the first draw of PPP funds. And then it also requires a 25% or more reduction in gross receipts from a comparable quarter in the prior year. So breaking that down, what that's saying is, when you look at your profit and loss statements for the quarters for 2020 compared to 2019, let's just say the third quarter for as an example, your 2020 third quarter would need to be at least 25% of a reduction from your gross receipts in the 2019 quarter. And I do believe that they allow you to kind of pick and choose which quarters you want to compare them to. So if you did really well in 2019 for Q3, then you wouldn't want to use Q3 as that comparison mark. But some of the banks may request all documents and then they make that determination. But I would tell you to just kind of be diligent in knowing where your numbers are so that if they had any rebuttals, then you can rebuttal their rebuttal. All right. And so now with the second draw, the loan is up to 2 million and still 2.5 times the monthly payroll costs, with the exception of hotels and casinos and theaters where they can use 3.5 times the monthly cost. The maturity on the loan is 5 years at 1%. And again, we'll talk about the expansion of the expenses. So who's not eligible to receive a PPP loan? If you were not in business on or before February 15, 2020, then you are not eligible for a PPP loan. If you are what's called a shuttered venue operator grant. If you receive that grant, then you can't receive the PPP loan. And that's mostly for like the casino, the hotels, the theaters. If you are a publicly traded company or a lobbying organization, you're not eligible. Okay, so current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. This is a new line of certification that you have to make on the application. So as you're applying for the PPP, you're telling the government that you have economic uncertainty. So if you feel like your economic future is pretty certain and you will have the funds, then I would encourage you not to apply for the PPP loan because you're making a certification that you have economic uncertainty. Expenses are deductible for federal tax purposes. Before they passed the new legislation, the way that the original tax code is worded, you would not have been able to deduct any of the expenses that you paid using PPP funds. So they reversed that, and that's huge to business owners. So you can deduct the expenses as deductions on your tax return. Again, the idle loan advances, that 10,000 or up to 10,000 does not reduce your forgiveness anymore. And borrowers who returned all or part of the original loan may reapply. And loans can be calculated if it would result in a bigger loan. So that's that first draw that I was telling you about, where if you run your numbers again and it turns out you could have received a bigger first draw, you can reapply for modification for that first draw. And then this also defines what a seasonal worker is. All right, so now let's talk about the eligible expenses. I'll run through these. Of course, we remember the whole 60% payroll, 40% non-payroll. So let's focus on the non-payroll items. Within the non-payroll items, you can now deduct operational expenses, and some examples would include your payroll processing, your sales and billing software, your legal, your accounting. If you're consulting with your legal team and your accountant on processing these applications and anything related to COVID, you can now deduct those expenses as part of the 40% non-payroll. All right. And so now property damage. So with all the riots that were going on after the protest, if your business was one of those businesses that were harmed and you did not get reimbursed from your insurance company, then the money that you spent to bring your business back up, you can deduct as PPP expenses. All right, and so supplier costs, paying your contractors and this would have to be for contracts in effect before your cover period started. And then now worker protection related to COVID measures. Ventilation systems, physical barriers, drive-through facilities. We're now putting like those plastic barriers in between us. Anything that you needed to do to modify your center for COVID-related measures is now deductible or eligible as an expense. So now touching on the forgiveness. So once the loan is forgiven, it then becomes income. So right now it's a loan, it's a liability. It should be on your balance sheet until you apply and receive forgiveness for it. Once you do receive forgiveness and you move it off your balance sheet onto your income statement, just remember that it's income that's not taxable. So be careful on your 2020 and your 2021 tax returns. All right, so your cover period is now, you can pick anywhere between 8 to 24 weeks. It used to be where you had 8 or 24 or 8 weeks, depending on the time that you filed. So what we know with the PPP is that it's a moving vehicle. The rules are changing daily, weekly. So at the time of this webinar, you can choose between 8 to 24 weeks, and your cover period can extend beyond 12/31/2020, which was the original date when we thought COVID would be gone by now. And so you can defer your payments up to 10 months after your cover period. So let's say you select a cover period of 24 weeks. So it would be 24 weeks plus 10 months would be when your first payment is due on that loan. All right. And so if you took out a loan of $150,000 or less, then there's a simplified loan forgiveness application that's coming out that you can apply on a one pager without providing any documentation. The idle advance, again, does not affect your PPP forgiveness. And so with that 150,000 forgiveness application, like I said, you would just sign and submit the one page with your loan amount and your number of employees retained, how much you spend on payroll. So they're just pretty much taking your word for it, and you are signing off, basically attesting that you're complying with the PPP requirements. And I would encourage you, of course, you don't have to submit your documentation, but I would encourage you to retain your records, of course. All right, so there's a new safe harbor deadline. PPP loan forgiveness is reduced for borrowers that reduce wages or employment levels for the cover period. So remember, you had to rehire those employees, bring them back in order to have the entire PPP loan forgiven. So here are some kind of safe harbor dates. So if you did have a reduction in staff and you were on the kind of like the original first draw PPP loan, then you need to restore those employees by August 8th of 2020. I'm sorry, December 31st, 2020. So on the second draw, you need to restore your salary levels at least through the end of your cover period. So your cover period could be anywhere between 8 to 24 weeks. All right, let's see. So for the forgiveness, pretty much a timeline. You'll submit the application. The lender will have 60 days to look at it and send it off to the SBA. The SBA will have 90 days to make a decision. And then for loans that are $2 million or more, the SBA is requiring you to complete a loan necessity questionnaire to kind of prove that the loan was needed in the first place. And then any remaining balance that is not forgiven, again, you'll pay that back over either 2 or 5 years, depending on when you receive the PPP at 1%. All right, so some documentation that you would want to have in place would be your 2019 and your 2020 business tax returns, or at least your profit and loss statements from 2020, your payroll tax returns, your 1099s if you're an independent contractor, your Schedule C if you're sole proprietor, and of course your payroll records, your health insurance information, and your retirement information. Other documents may include canceled checks, receipts. I won't really go over that because it depends on the bank and what they're requesting for forgiveness. So there's 3 applications currently, unless something changed as of the date of this webinar. So let's talk about all 3 and which one you would fall under. Under the 3508S, this is for loans of $50,000 or less. And the borrower that with its affiliates receive PPP loans totaling 20 million or greater cannot use this application. So $50,000 or less. And then there's the 3508EZ. For this one, you would have to be self-employed without employees and did not reduce your wages by the 25%. or did not reduce your wages by the 25%, nor that they were not because of the operating restrictions due to compliance with COVID. So if you had to reduce it by 25% and it was due to COVID requirements, then that's kind of a safe harbor there. All right, and then this one is pretty much the long form. So if you're not eligible for the first two, then you would default to this one. All right, so payroll tax credits. Now available to businesses that took the PPP loan. That's big because in the beginning, if you took the PPP loan, you could not take the employer retention credit. Now they're allowing you to take both. The only difference is you can't calculate the credit on the same wages. So if you're calculating your PPP loan based off of the last 2 quarters of 2019, then you cannot calculate your employee retention credit on the last 2 quarters of 2019. So you want to be very strategic, sit down with your CPAs and also your payroll software provider to see what makes sense in applying for the retention credits and the PPP loan forgiveness. So with this one, there's 2 retention credits out there. There's the one for the original one in 2020, and then there's kind of like a remix in 2021. This is the 2020 where if you had 50% or more of a decline in your gross receipts, then you could basically get a credit up to $5,000 per year. With the 2021, you can get up to a $7,000 credit per quarter. And so that's based off of the wages that you paid your employees. And the requirement here, instead of a 50% decline in gross receipts, this one is a 20% decline. And it's for the first 2 quarters of 2021. All right. And then the paid leave tax credit. So it's no longer mandated. So if you do have to pay your employees that left, you're no longer mandated to do so. Check with your legal counsel on that. But this extends the payroll tax credit through March 31st, 2021. After that, it's no longer available. All right. And so the payroll tax deferral, this is one that I do not recommend at all, where you're able to kind of hold on to your employees' withholdings and pay that at a later date. Well, they've extended that date from the end of December last year to the end of December this year before penalties and interest start accruing. I will warn that you are responsible for paying those unpaid payroll taxes. So they're not going to go after the employees if you can't pay, they're going to go after you. So be careful with selecting the payroll tax deferral option. All right, so now let's talk about the Childcare and Development Block Grant. I have my final polling question going out. Let's see. Do you currently participate in the Childcare and Development Block Grant? Okay. Okay, so it looks like the majority of you do not. All right, so there's an additional $10 billion to help prevent, prepare for, and respond to coronavirus. And this is used as a supplement, not a replacement to the already general revenue funds for childcare assistance for low-income families. So if that's not your area, if you're not using the block grant to service low-income areas, you may want to inquire about the supplemental funds that could be used outside of the low-income families. All right, so with this, funds under this heading of the Act is providing relief from co-payments and tuition payments for families. So we're not quite sure how all of this is going to play out. I believe the states, all have to come up with their own plans of how they're going to push the funds out. So they'll have their own process of how everything works on the co-payments and the reimbursements and everything. So I would say check with your state agency who basically runs the block grant to see what the rules are in your respective states. Funds may be used for paying the portion of childcare providers' costs ordinarily paid through family co-pays, and funds provide continued payments and assistance to childcare providers in the case of decreased enrollments or closures related to coronavirus to ensure they are able to remain open or reopen as appropriate and applicable. So the government is pretty much funding childcare providers right now to keep you guys afloat and stay open. States are encouraged to place conditions on payments to childcare providers that ensure the childcare provider use a portion of the funds received to continue to pay wages and salaries. So just like the PPP loan has like their stipulation on how much has to be payroll, how much has to be non-payroll, states are going to be encouraged to kind of implement their own little rules there. Agencies may use funds provided to support the stability of the childcare sector and to help providers afford increased operating expenses during COVID-related health emergencies. The agencies are expected to publicize widely the availability of the funding and also include center-based childcare providers. This includes the family childcare providers and group home care providers. Agencies are encouraged to implement enrollment and eligibility policies that support fixed costs for providing childcare services. And this is kind of delinking the provider reimbursement rates from the eligible child's absence in closures due to COVID-19. So I think that's a big deal with like counting the absences there. States are authorized to use funds to provide childcare providers assistance to healthcare sector employees, emergency responders, sanitation workers, farm workers, and other workers without the regard to the income eligibility requirements. Funds provided to states may be used to provide technical assistance to childcare providers to help providers implement practices and policies in lines with guidance from state and local health departments and Center for Disease Control and Prevention regarding the safe provision of childcare services. So definitely tap into those agencies to see what you can get to help you get in line. All right. So for carrying out the Childcare Development Block Grant of 1990, $5.9 billion will be a supplement. Again, not a replacement of what's there for the low income families, but as a supplement. So now some resources. Gusto Payroll has a really awesome resource page where if you're not eligible for the EIDL loan, the PPP, you can go on here. It's very interactive and you can filter it by state to see what organization or what entity may have a grant program or a loan program that you could potentially qualify for. I'll also provide you with these links. As I stated before, I have YouTube videos from the past going over the original PPP stuff, some forgiveness videos, and other educational videos on my YouTube channel. I have a link here for the PPP application, the second draw application, the EIDL loan link, link to some lenders, and then also FAQs. If you have further questions, you can go directly on the Department of Treasury's website and look at their FAQs. And they also have FAQs on the loan forgiveness process. So I think those will be great resources of information for you there. And just a little bit about myself. I'm a virtual CPA firm. I specialized in outsourced CFO services, tax preparation, and also bookkeeping and accounting, primarily to childcare providers. And these are my services. It'll be on the printout there for you. And then I do want to make you aware of some things that I do have that are specifically geared towards the childcare industry. I recently put out an ebook, a free ebook on the top 5 KPIs every childcare center should track. And I do believe that webinar is on Kangaroo Time's YouTube channel. I'll also post the ebook in the link there so you can have that there to download. We have a Facebook group that is geared towards the business side of childcare, so more things financial, and then also my YouTube page. Okay. And so anyone who's on the call today, if you are looking to get kind of PPP forgiveness ready or ready for the upcoming tax season, then let's have a 30-minute video strategy session. This is complimentary, just so we can kind of get to know you and understand your business and understand what your goals are. And we're pretty much everywhere on all social media platforms under WATS CPA. So find us and connect with us. And at this time, I would really love to thank Kangaroo Time again for allowing me to partner with you and present to you this important information on the Consolidated Appropriations Act. And I will entertain questions at this time. Genevieve, is there anything that you would like to say to close out before we go into the Q&A?
No, I think that is all. Thank you so much for doing this for us. We had so many requests from people about the new legislation that was passed, so we really appreciate that you doing this for our community as well. It's always great to come together with one of our great partners. So thank you so much for that. We'll also share all the information that we have that Audra is providing today in a follow-up email. So along with the recording, a certificate, and then all this information that Audra is sharing, will include in a follow-up email that will go out tomorrow. So other than that, that's all I've got, Audra. And
Awesome. Thank you. Okay, so I do have a few questions coming through, and we do have some time left, so I'll go through those questions and answer as best as I can. So the first question, in regards to employees' health benefits as a deduction, can you deduct the costs to establish a healthcare benefit plan? We do not currently have a plan in place, but are in the process of designing a plan. Yes. So as part of the benefits, if it falls within the cover period, so if your cover period that April 2021 falls under your cover period, then you could use it. But if it falls outside of that cover period, then you will not be able to use the cost of getting that benefit plan started. But of course, if this is for the second draw PPP, which hasn't started yet, then yes, you would be able to use that. To my understanding, you would be able to use that as a benefits cost. Do you still have to repay the $10,000 grant for EIDL if you got it in the previous PPP? No, the answer to that is no. So if you receive the forgiveness and they reduced your forgiveness application, then you may want to go back to that bank because they may owe you some more money because they switched up the legislation where it no longer reduces your PPP forgiveness. Okay, so the next question I have here, I received $3K from an EIDL loan in April and then offered a loan in June. I only took a portion of the loan, 20,000 out of the 37. Okay. I'm wondering if I'm able to request the additional balance that I did not take, an extra 17,000. And this is all the EIDL loan. I believe the answer to that is yes. The government is very like they need to get rid of this money. So they're pretty much funding everybody who needs the money. So if you didn't, I know for sure for the PPP loan, if you applied and you returned the money, or if you returned a portion of the money, that you can reapply for the difference. For the EIDL loan, I'm not 100% sure, but I would lean more towards yes, if they're following kind of like that PPP model. So I would definitely reach out to the SBA and see if you can reapply to get the additional 17,000. Okay, and then the next question I have here is, how is economic uncertainty defined for a PPP loan? That's the question. It's not really defined. There isn't anything in black and white to say it has to be X amount under revenues, or that kind of thing. You kind of gotta plan for it. Look at what your future income and your future expenses are, or what you intend them to be, and then also look at the market, look at your industry. If you know that there is a boatload of funding coming down from a state agency to keep you afloat, then it may be a little bit harder to argue that you have economic uncertainty. Okay, confused about PPP forgiveness, 50K loan or 150K loan to be eligible for simplified process. So originally, the 50K loan was kind of like the shorter application. And then with the passing of the new legislation, there's a new application for anything under 150, and that hasn't been released yet, and that's supposed to be a one pager. So the way that I understand it is that $150,000 loan application may replace the $50,000 loan application. So all this is kind of like new coming out of the pipeline. So not sure if that simplified 150,000 loan will completely erase the EZ and the S, the 3508 CS. We'll just have to wait and see the final documents that come out. All right. Do you know of any grants for expanding the size of the program, building another room? I do not know of any of that right now, but what I would encourage you to do is contact your local small business development center and reach out to a consultant. They have consultants on staff who is able to help you with finding funding for your business, for things like expansion and bringing on employees. And a lot of those resources are free. Okay, yeah, so there's nothing on the SBA site right now because the bill was just passed and now everybody's scrambling to produce the fruits of the bill. So it may be a week or two or a few weeks before any of the forgiveness applications are readily available. I would just say be in contact with the banks that you originally applied with, just to kind of keep updated with the forgiveness process. Any idea of when the dates are for the revised 150? Again, no. So all of this is brand new and they're scrambling, trying to figure everything out right now. So I think we answered all of the questions and we have about 3 minutes here left. So again, I would like to thank everyone for taking the time out of their busy day to join us on this webinar and learn about the Consolidated Appropriations Act. Again, we'll follow up an email with a link to the video, the PDFs, and all of the other resources that were within the PDF. So you guys enjoy the rest of your day, and thanks for watching.